Hello everyone, K-Team here from the Traders Club to tradersclub.com. I do want to talk about gold and silver and miners today. The question is gold ready to buy, right? Is gold have been, the precious metals have been getting some attraction or getting some attention as of late with some surge going on, and obviously right now we are looking at gold miners here. This is actually a monthly chart, but I kind of want to go back before we get into this. I wanted to go back. This is an article that I wrote. This was late 2014, so it's about a little bit over a year ago, where I felt like problem with the precious metals miners and gold and silver. And what I was talking about in this article was that the monthly chart. Again, we're gonna go back to it, but this was a monthly chart that I was talking about here. Obviously, this GDX monthly chart, and this is a monthly 20 simple moving average, right? So we have each candles. Right, so each candle representing 1 month, and everybody always they're so caught up with on a daily movement, they always forget to look at a big picture. It is imperative. It is very important that you look at a big picture so you understand where the market or the certain sectors or certain market is coming from. You know what I mean? So people are so quick to presume upon the market and say that, hey, the gold has been bottom and obviously, we could come up with a certain assessment, and sometimes the certain assessment can be proven wrong in time. But when we have, we got daily chart, we got daily market movement, we have intraday, 10 minute, 15 minute, 20, 30, 60 minute intraday movement. We got daily movement and weekly and monthly. But especially when we're looking at, we want to look at if is this miners, are we completely bottom? Are we seeing any kind of potential evidences? Then I really believe it is imperative that we look at a big picture, like a monthly and a weekly and daily, and then we have to come up with our assessment more carefully in that way. So again, about over a year ago, what I was talking about in this, I know there's some people out there thinking that, well, he just wanted to show that, that he called. No, that's not what I'm trying to get at all. It is, people are stupid sometimes, say stupid things. But anyway, what I'm trying to do with this article is I made plenty of wrong calls, guys. You guys know that. So what I'm trying to do with this is that I'm trying to find out, because that monthly 20 simple moving average was definitely a problem for the miners. Obviously, this thing went up, you can see that once it started rising up, that means we're in a bullish term. And then once we breached, and again, this is, if you want to understand technical analysis, and something that I always say is that each market, each equity, each stocks and each market has its own behavior, its own personality, and its own characteristic. So it's important that we understand, we study, the historical patterns or a past behavior to ascertain a potential future outcome. That's exactly what I'm trying to do with this video and with this chart. We'll go back to today's chart and I'll explain it. So so obviously when we have this monthly 20 SMA rising up, and as long as this thing is in that up slope, we would have to give benefit. I mean, looking at a primary term, right? We're talking monthly chart, so looking at a primary term, when the monthly 20 simple moving average is rising up like this, we have to give benefit of doubt to the buyers, right? But once we gotten below right here, this was a level right here, definitely that was a warning signal. I mean, just because we got below that, does that mean that it's gonna straight up crash? No, sometimes we get slightly below that, and then this thing goes, just goes right back up. That's what we call, head fake, traps, and shenanigans, right? But so what happened was we got below that level, and then we started getting back up. So that's what we call old resistance. You heard that term. If you're using technical analysis, if you're learning, if you're studying technical analysis, you've heard the term old resistance, new support. A lot of times that is, people are saying that in regards to these pivot levels, right? Old resistance became a new support, and a flip back, it became Right, new resistance. Old resistance, old support, new resistance, right? Also, it happens in moving averages as well. So moving average, as you can see, it came up and it started acting as support. You see that for at least 1, 2, 3, 4, 5, 6 months. I mean, that's a long period of time to be in a support right above this, monthly 20 SMA. Not only you can see these wicks, right? I mean, that what it's saying is, during the month, it gotten below that level, but towards the end of the month, buyers came back in, kind of brought it back up. So it's important, when you're tracking these things, when you're trading and when you're investing in a long term, you look at these things to understand when the month is over, okay, where are we at today? So I mean, if you're, let's say that this month, when the month was over and when we gotten below the monthly 20 simple moving average, there's a warning signal. It's not a time to panic yet, but it's a warning signal, right? And then when we got up, and that old support is potentially becoming new resistance here. This is what we call what? A hangman candle, right? Hangman, right? So it looks like a hammer candle, but a hammer candle is only valid when it forms in the bottom after like a bearish downtrend, right? So we got a hangman candle there, and then we saw the follow through, right? This is a hammer, right? And this is a hangman. They look the same, it's just the location is different. You see that hammer? It formed at the support after a downturn, right? So, and then we did see some bounce. But we saw that resistance, that monthly 20 SM became resistance. And then we saw how many months? 1, 2, 3, 4, 5 months of, downturn, right? You could see that correction, and that's a huge warning signal after this kind of move here. And then we initially saw that bounce. That's what we call one last fight from the bull. Something that I always, I've been talking about, like if you've been following my videos, on the equity market, something that I've been talking about in the market is that market tends to, we'll see this kind of abrupt sell-off in a general sense, and then you would have that one last push from the buyers, one last push from the bulls, because bulls are not going to just let they're not going to just roll the red carpet and welcome bears. They're going to fight one more time. And I've seen in equity market, historically speaking, where they can even turn things around and continue higher. But when the prior resistance acts as resistance again, you see that we got hammer candle here, and then we threw what? Another hammer. That's very important, right? We got a hammer there, we threw another hammer. What does that mean? People are selling that up here, people are selling up here as well. So we got very similar sentiment, and that is same level as that, that monthly 20 simple moving average. It's very important. Location is very important. Again, hangman, right? Hangman, hammer. Do you see the difference? Once we got rejected and confirmed, that was it. I mean, that was a huge disaster because we already saw the one last fight from the bulls and we got rejected, and that's when you're gonna see a huge crash. And as since then, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I mean, we've been in this downtrend, we've been in this crash mode for a really long time. And then, when I wrote this article, I'm like, oh my gosh, and then it came down, and then you see we started moving sideways, and this was where a lot of people are anticipating a bottom. But again, we needed to continue. We needed to at least reclaim that monthly 20 SMA to the upside. Not only that, the problem was we have gotten now below this support level. And you know what? I don't want to put too much weight on this because I've seen where this can be a massive trap. This is a level where both bulls and bears are very vulnerable. Because this is where most common, unseasoned, newbie, rookie trader investors think that, we're going, we're below that level, so this thing is going to tank. And that's where bulls can really make their comeback and just turn things around. But we can't just assume that's what's going to happen. We need substantiation from the price action, right? So monthly 20 SMS definitely has been a problem since here, really, 2012. Right? So let's go back and see where, let's see where we're at. So this is today, okay? So we got this is today, exactly same. This is exactly what I was talking about here, here, and then we came down here. Do you see what happened here? So this was support, pivot rather, right? This is a pivot. Pivot meaning it was support at one point and it became resistance later. So it's a pivot. It changed direction when it hits that level. But really, what was more important than pivot? Because we gotten slightly above the pivot or the support. Remember what I said? This is where, you know, both bulls and bears can be vulnerable. This is why we had that 1 month of bullish rally. But again, we had that monthly 20 SMA getting down, and hitting it again. And we saw another 1, 2, 3, 4, 5, about 5, 6 months of bearish, you know, downturn, right? Here is possibly could be a good news, but again, we are still in a downtrend. We gotta keep that in mind. We have gotten slightly above monthly 20 SMA, as you can see. We are not able to do that. You see, 2012, late 2012, early 2012, January 2012, late 2012, late 2014, and early January 2015, we were not able to get above. Well, recently, February 2016, you can see we got above it. Not only that, volume is, we got a huge accumulation happening here. So you can almost look at this as almost like a bullish divergence in volume, right? The price action making lower lows, the volume making higher highs. So we have certain evidences. And also I want to go back to GDX on the monthly. Let's extend it a little bit. So what we have is kind of a like falling trend or falling channel going on here. So obviously, if you look at this resistance level coming down, is this a level to buy? It's not a level to buy because this thing how nobody knows how long it's gonna continue, right? So as far as the price action is concerned, we're still in a downtrend. We got the lower highs going on, lower lows. But let's look at maybe, let's look at potential evidences that we may perhaps seeing some, people or institution accumulating slowly. That's, first of all, here, you can see you kind of have this kind of a higher high happening here at the top. But what did the MACD do? MACD started coming down. If you hold on a second there, like that. You can look at it as more of a, kind of sideways move, but you can see how MACD has already crossed over, and then you're already sloping down, while the price action moving sideways. It was not like textbook bearish divergence, but it was losing its momentum. Well, in flip side, price action is making lower lows. Well, the MACD has made higher low. We have bullish divergence on MACD, and very steep one at that. But is that enough to just go long here in this vicinity? In my opinion, no. So let's talk when and where, right? So let's go to daily chart. You know what? Let's go back out. Let me look at weekly real quick. Okay, let's go to daily. Okay. And again, as you see the monthly chart, we are seeing possibly certain signals. Let me get rid of that and then put in my normal moving averages. Okay, so what we have going on here is this. We bottomed, or at least we had this kind of sideways movement, right? And then we broke out of that. That's a good sign. However, we've done something similar in the past. Like right here, we had a double bottom. We pulled out of it. We broke out of it, and then we fell right back inside. You know, we've done something similar where, you know, we kind of had this huge invert head and shoulders, and then it looked like, you know, we might just continue, and then we just tanked. Why? Because we're, again, that, you know, the monthly 200 SMA or 20 SMA, the monthly chart that we just talked about. So we're still at a resistance level, right? And I could probably redraw this one here too, just to, so we can mark that one. So if you ask me, well, okay, yeah, so you show me that there's a sign, the monthly 20 simple moving average, we got slightly gone above it. And we have a monthly, you know, bullish divergence, and we got both monthly, you know, volume bullish divergence, MACD divergence, and volume divergence. So we got these signals, we got good evidences, but when would you consider going long? Well, as far as the technical is concerned, I want to see I want to see price action. I want to see evidences. I want to see substantiation from the price action that it is starting to cultivate an uptrend. What that means is this: we're still in a downtrend. I mean, we can all agree with that, and we can just go back to principle of elementary, right? What is the definition of downtrend? Lower lows and lower highs, and anyone can see that this high is higher than that, and you can see that the highs are lower, right? This high is higher than this high. Obviously, this high is lower than this high is lower than that high. What does that mean? And we got low, lower low, lower low, lower low. What does that mean? We're still in this characteristic of downtrend. Right, we're still in this characteristic of downtrend, and some people might argue, well, okay, you can see 100, 200 SMA is possibly ready to cross, and if they cross up, that's a, you know, golden cross. And that means you know, there is you know, institutional accumulations. People are starting to buy gold. Doesn't that mean that the market has reversed? Well, we did something similar. You know, right here, that's what it appears to be. You can see that we have golden cross right there, 200 SMA coming down, and then flipping back up, and then we stayed up for a little bit. Tanked. So signals like a moving averages, or, you know, the volume we looked at, and these you know, the MACD bullish, all those what we call signals are just signals until it confirms, until we see substantiation from the price action. You ever watch, you know, like CSI, these you know, those crime shows? And then, you know, this is an FBI agent go to the crime scene, and then they gathering all these evidences, signals, and he's like, what do we got? And then they're laying upon him all these different signals. So let's say if we're investigating gold, and you're saying, well, you know, we just got above, you know, the monthly 20 SMA, we're staying above that. We have this kind of bullish divergence on MACD, we have bullish divergence on volume, and with a huge accumulation volume happening on monthly chart. I mean, this might be bottoming. And then what does the FBI agent say? Can you substantiate that? Right? Can you substantiate that? Can you prove those signals? Only way we can prove those signals is from the price action. So that's what I'm trying to show you here. Is that what we need to see is a cultivation and uptrend. So I have to say this. We have a lot of levels we need to overcome until it becomes an uptrend. What is the definition of uptrend? Higher lows and higher highs. We still have a lower high. We need to conquer all of that. We need to reclaim all of those to the upside. So I wouldn't want to go long, first of all. And I don't want to just give you price point. Well, above 28, I would go long, because this thing could do something like this and then go up and then just roll over. That's not going to work. It's not going to work. Just giving you the price level above 28, go long, that doesn't work. What we need to see is substantiation from the price action to confirm those signals that I've just shown you, the monthly 20 SMA, the volume bullish divergence, and MACD divergence, and volume accumulation, right? So if those volume is legit and they're here to stay for long term, we should able to see at least something like this happening. And this could take another year, so just keep that in mind. I wouldn't want to go long on gold and silver for another year, maybe even a year and a half. Unless you just want to, you know, buy here and then you just hope for the best. You You just know you just know that you just know that this is bottom, and you just hope for the best, go for it. But for me, I need to see substantiation, right? So what I want to see is this, and this is theoretical, scenario that I'm going to give you. It's not going to happen exactly that way, but what I'd like to see is probably going somewhere here. If we're able to get above this resistance, right? And again, it might not play out this way, but something like this. What I want to see is maybe something like this and coming down. And I need to see a cultivation of an uptrend and doing something like that. For the first, if we do this, just this much, for the first time since, early 2000, since the crash, we have cultivated higher low and higher highs. Do you see that? That's what I want to see. And it's still not enough at that point. Why? Because we have this low. We have got these lows that we need to overcome. At that point, what we want to see is this thing, kind of hanging around here for a little bit and then breaking out above 28. Here's a tricky part. And listen very carefully. This is very, very important. Because gold has been down for so long, it will love to play mind games. This is what I call traps, head fakes, shenanigans. Everyone's looking at 28. Everyone's looking at 28 and like 30-ish level. This is a level everyone's looking. Everybody understand that this is a level that, man, above that level, because that's a major, right? That's a major pivot level. Everybody's looking at 30. There are some people who are very, very patient. And these guys will just say, well, I'm not going long until at least it gets at least 30, because we got to get rid of all of this first and start cultivating, to the upside. So what we want to see is this. Once we get above 28, 20 and 30 is going to be challenging. And, maybe I'll do another video in about a year later. It's going to take time. I want to say right now is not the time. Unless you want to go for like this quick, these quick moves in between. If you're one of those traders that you just like to trade, swing trade, quick trade here and there. But if you're like somebody like me who love to just kind of position trade, you love to like ride that trend. You're a trend follower. You want to go long here. I mean, if, you got a left shoulder head, right shoulder. You don't want to go long until you want to see higher high coming down, creating higher low. I would actually go long right about here. And then I would continue to ride this, and I would continue to add till we start to see certain signs here, bearish divergence, and then kind of take my profits after, riding this thing for about a couple of years or just milking it. That's kind of my strategy. That's what I like to do. I think gold has a potential of doing that if you can see stuff like this. And then when we get up 20, 30, I wouldn't go long once it gets above it. What I want to see is above 30, I want to see one more pullback, retest. Remember we just talked about the old resistance becoming new support? Old resistance is becoming a solid new support and then get up. And this is where I like to go long. And that could take another year, maybe 2, year and a half. Okay? And if that's the truth, if that's what's going to happen, I mean, we could see this thing really going at least back up to, some of these levels or even higher. So that's, at least you don't know when to go long term on gold. Those are the things I'll look for. I'll quickly look at gold as well. And again, they all look pretty similar. Gold, about everybody's going to be looking at this level right here, right? About 135-ish level. Same thing. That's what you want to look at, 130, 135 or so, 135-ish level. Keep in mind that we're still kind of in a downtrend. We're still in this, this bearish falling channel type of deal. Good news about that, looking at a monthly chart. This is a monthly chart here, guys. Good news about that is you see that monthly 20 SMA we talked about. We poked above it. We poked above it for the first time since, back in 2012. And that's the good news. And again, some people might think that that's a good enough sign for me. I'm going to go long. It's not for me. I need to see a cultivation of an uptrend, right? Silver, see silver still with this kind of, you know, falling channel. You could look, some people are going to look at this as a falling wedge where it's going to snap back up to the upside. Well, you know, sometimes that doesn't always work. I mean, you know, some people looked at it, this one as the wedge right here, that this was a falling wedge. Well, it would just go snap back up. It didn't. We just continue lower, right? So these wedge patterns, they're always not going to play out, so I wouldn't put too much weight on that wedge pattern. What I really pay attention is the lows and highs. Are we still in a downtrend? Yes, we are. Silver, we're still in a downtrend. So, I mean, you can see even here we get these pops in between, but then it continues to go lower. Why? Because we're on a downtrend. So I need to see for silver, I mean, for silver, it'll be probably 21 to about this level, like 22-ish. This is a level that everybody's going to be watching. So I wouldn't want to go long until I see certain cultivation that I just explained to you. Again, that could take another year. So my, you know, my advice or my thought on GDX and miners, gold and silver, and I'll let you go with this, is that, let me just put that back, is that right now is not the time to go long. Again, if you're gonna do more long-term trading, or if you're gonna do a more of a long-term investment, I don't think it's time to go long on miners or gold or silver. But I think it's definitely time to put on your radar. But be patient. Maybe, you know, give another year or so, maybe a year and a half, could be even 2 years. And once you start to see in this monthly chart, you start to see something like this, that could also be in this like a huge invert head and shoulder. And then what you want to see also is that as long as this moving edge is kind of sloping down, it's still saying that the pressure, the wind is blowing to the downside. All right, it's like a waterfall. I mean, it's gonna have its ups, but it's really difficult to go against that current, that waterfall. What you want to see is that monthly 20 SMA start flattening out and then start going up like this. And the price action, what the price action does, it flips around and then all of a sudden you start riding it like, you know, it's riding a surfboard. You know what I mean? So that's kind of what you want to look for. I'm probably not going to do another video or anything like that on gold or silver until I see kind of, you know, some good substantiation from the price section. But I thought because there's a lot of talk about gold and silver and GDX, and there's some questions about it, so I thought I'll do this video, let you guys know what I think about it. I mean, I've been watching, you know, not closely though, but I'll probably be, you know, I have gold, silver miner in my watch list, but I probably don't want to go long until, you know, it's probably going to take another year or so. And then once they start to cultivate an uptrend, then I want to do more of a long-term trade on gold and silver and miners, like position trading. What you would do is, you know, you would get in a position, you know, you hold for about 6 months, a year. You know, you could even buy leaps, options, in the money leaps, and then you hold for about 6 months, a year, and then take some profit out, not all of it, like, you know, 50% or 70%, and then when the market pulls back, add some more in a, you know, proper level, and then wait it for it goes back up again and hold another 6 months, you know, a year, and then, you know, take out some profit, and then kind of keep riding it until, you know, for about 3 years or so, until you see, you know, this kind of stuff happening, like where, you know, the monthly 20 simple moving average is starting to slope down and start acting as resistance. Then you completely get out. You see what I mean? So you start going long and ride it, and then, but you watch that monthly chart, because you're long-term traders. You gotta look at these monthly and weekly charts. You're not gonna be obsessed with like intraday charts or, you know, daily chart. You're gonna be patient. You're gonna be calm, cool, and you're just gonna ride that thing. And that's how I like to trade, and that's how we do it here at Traders Club. We do longer-term trades. We like to follow trends. And these are the setups that we look for. So anyway, I hope this video will find you helpful. And if you have any questions, you're always welcome to let me know. Have a great night.